Good morning, traders and investors. Roger Scott here, senior strategist for The Trading Pub. It's Monday, it's September 18th. Welcome, welcome, welcome. The market's going to open up in about an hour and 27 minutes to be as specific as I humanly can with you. Before I begin, I just want to make sure you know that we've opened up my VIP room for the summer. I haven't closed it yet. It's happening at noon today. If you enjoy these videos, you get a full hour of me live. I'm actually going to be starting to do these videos in the morning live, so you can ask me questions as well. But for the time being, you can catch the second part of this video live for an hour at noon, Monday through Wednesday, and 11 on Thursday and Friday, Eastern Time. The link is above or below this video, and if you can't find the link, it's in the YouTube channel below the description. YouTube channel is Roger-Scott YouTube channel. You could find the link there as well. Make sure to like these videos, subscribe to our channel, and boy, oh boy, we've got a lot to talk about. Whew, did that in less than a minute. So as you can see here, the Nasdaq is gearing up to open up down quite a bit, about 54, but that's pretty random. It's about the Dow being down 100 points. Dow's down 37, nothing really crazy. One of the biggest reasons why the Nasdaq went down last week, the QQQs went down last week. Let me just pull up the QQQ here, so you could see here what's going on. One of the reasons why the QQQ went down last week was the chip sector. The chip sector, let's see here. What's the chip sector? SMH, semiconductors. They got negative news from Taiwan Semiconductors that they're going to be delaying shipping, and the indexes, the semiconductor index, which has all the semiconductor stocks, fell. Although we're at the 100-day moving average, and the question is going to be now whether the semiconductors hold. They're either going to break and go to the 200-day, or they're going to hold and bounce back. This support area right here is really strong. Now, if they break the 142.42 level, the odds are, which means they broke into 100-day, the odds are they're going to go down to the 200-day. But for right now, let's see if the 100-day can hold them over at least today, and if it rallies or if it breaks and goes a little bit lower. That will put a lot of pressure on the QQQ, and the QQQ is already below that level. But as you can see here, the QQQ is not at that level yet, and this resistance area, support area, I keep confusing support and resistance. You would figure after 29 and a half years I would have a down, right? It's so second nature that I get confused. It's like saying 1 and 2, 1 and 2, 2 and 1 all the time. So you could see here we have these levels, and the level on the QQQ, the Nasdaq 100 is at 356.49 right now. Keep an eye on that level, and it tends to be right near the 100-day moving average, which is really, really important as well. On the SPY has more blue chips, so it doesn't have as much pressure on it. It's further away from the 100-day line. But keep an eye on this level, which coincides perfectly with the 100-day line, which is why I like to use the 100-day line, because they act as support and resistance areas, which is at 436. On the Dow, let me give you those levels on the Dow. These are major levels. On the Dow, the next stop is also at the 100-day, and that's at 342.56. We're right now at 346.14. So about on the big Dow would be, we're at 34,600. We would have to go down to 34,200. Not too much. I mean, a couple of days swing if it tends to progress in that direction. One of the biggest worries I have in light of the fact that the Fed is having a big agenda, they're going to be announcing on Wednesday, is the bond market. And I warned you about this. Now, during the holidays, they were very stagnant, but they fell down. And as I told you, they put pressure on the stock market. The next line is right here. And if it breaks that level, we're not going to be in a good position. That means there's a higher chance that the Fed will, in fact, raise rates in November. We're not there yet, but that's the big issue. As far as sectors, now I'm going to look at the 3-week, because the 3-week is giving us 1 week is too much noise. 6 week it's too far right now because these sectors are just going crazy. But just to show you, just to take a little bit of a wider view, energy is still leading. Consumer discretionary is still number 2. Communication, so tech has not given up the ghost yet. But if you look at technology, semiconductors, they're down here already. So the question is tech going to come right back up, or is it going to push communication services and consumer discretionary down? It's very hard for them to be apart, and most of the time they're not apart. Though QQQ is still up here, you have financials and utilities and energies rocking and rolling. I like financials right now, and I almost like utilities. I still like communication and discretionary, but I'm very careful with those. And then you have the QQQ up here because, well, the QQQ is communication, consumer discretionary, and technology. So as you could see here, we have a pretty clear picture of what's happening. Energy is still leading. Tech, consumer discretionary tech is starting to hold on, still holding on. Communication is still holding on. Utilities and financial, which means the blue chips, the Dow, is starting to come up a little bit. But then you have the small caps, consumer staples, healthcare, mid caps, industrial, home builders, all the way down. And we have a housing starts and permits report. So everything is totally out of whack. And I mean out of whack. If you look at the chart version, you could see here that energy still has a nice bullish trend. Consumer discretionary had a nasty bar on Friday. It was triple witching. It was option expirations for weekly, monthly, and commodities. So that could have been part of that. Communication also had a big downslope. Financials, they held up pretty well. They didn't break the low on Friday, while consumer discretionary communication did. S&P 500 bolted, but it seems to be holding right at that level right here. Let's see if it holds or not today. Volume is getting higher. The Dow Jones is still ascending a little bit. Invesco, the QQQ, Now, look at utilities. They are now almost at a buy level. Matter of fact, let's take a look if utilities now are above the 50-day line. They may be. Let's take a look-see here. Yeah, they are. They're above. As a matter of fact, they're now at a buy level. I'd like to see them a little bit. Let's see here. Right at the 100-day. Wait for them to cross the 65 level. Wait for them to cross the 100-day. Once they cross the 100-day and volume's picking up, they'll probably go higher. But utilities are not looking bad right now at all, as a matter of fact. That's defensive. The fact that utilities and energies are rising right now is not a really good sign for the market. But as you can see here, retail, look at that. It's looking awful. Technology, looks like it wants to come down all the way here, all the way to the base. Healthcare, stagnant and also breaking lows. Mid caps holding on a little bit, I guess, and industrial trying to hold on. But the wide swing of the market trajectory is not all that great right now. I mean, look at the S&P 500. We lower highs, breaking down. This is not a picture perfect scenario. This is not a really great scenario. So I would be really cautious right now. And I would be treading lightly, and I would be holding my positions at about half of their regular size. Now, FOMC starts tomorrow. No major news today. We may be able to get a little bit of a reprieve. Tomorrow, we've got housing starts and permits. And as I mentioned earlier, if you look at housing starts, if you look at the housing sector, home builders, look at this. Lower highs, breaking down. If it breaks the 77 level, nothing on higher volume. So if it breaks this level right here, it's going down. This is a major reversal here if home builders go down. And interest rates are going higher. And the bond market doing this, this is the long bond. This is 20-year plus. When this goes lower, interest rates go higher. Interest rates, higher rates, and home builders are just not good for each other. So let's talk a little bit about global economy and tie everything together. And I'm going to give you a day trading stock too. Investors looking ahead to the Federal Reserve's interest rate decision. It's coming out on Wednesday. On Fridays, the Wall Street major indexes both closed lower. Well, all three of them closed lower. S&P 500 and the tech-heavy Nasdaq 100 notched a one-week low. Adobe slipped over 4%. Photoshop software makes delivered a delivery outlook that matches the analyst projections, but left investors disappointed. Okay, chip stocks retreated. This was a big one after Reuters reported that Taiwan Semiconductor had told major suppliers to delay chip equipment deliveries. That's very bad, and that's one of the reasons why Nvidia, LRCX, and AMAT went down. Data on Friday showed that the University of Michigan U.S. consumer sentiment fell weaker than expected. That's not good, but their year-ahead inflation expectations ease. So investors are thinking that right now is a bad environment, but it's going to get better a year from now. That's what the consumer sentiment says. The manufacturing index came at 1.9 positive, stronger than expected, and industrial production also came in positive. I honestly think the triple witching last week, the option expirations, and the Reuters chip news is what really roiled and put pressure on the market yesterday. Blue chips were a lot better off on Friday, as you could see here, than last week. They actually closed higher. They didn't close I mean, they closed lower, but they didn't break the low. So it wasn't as bad. They were down 1%, while the QQQ was down 1.7%, and this S&P met us in between. So you could see that the reaction on the QQQs was much higher, 1.5% and 1.7 times, 1.5 times and 1.7 times. But again, that's just is what it is. You've got Federal Reserve interest rate decision. Federal Chair Jerome Squirrely Powell post-policy meeting press conference. It's going to be on Wednesday, and I think they're going to say, folks, we're sticking. Inflation is very sticky. What we're doing is working. We have to be patient right now. And I think that's really the truth. I just wish he said that a long time ago. There's a 30% plus probability of a 25 basis point rate hike in November. Obviously, this will change depending on his sentiment and the bond market. If the bond market continues moving lower, it's going to be a lot higher than that. Europe futures are down 0.65 as investors brace for a week filled with central banks meetings. And losses in tech and consumer stocks are also leading the market lower. Losses in tech and consumer stocks here in the U.S. and there, it's global market. China closed slightly higher as investors drew support from last week's economic data that pointed to signs of stabilization. Now, that's a big plus for our market. Data released on Friday indicated that China factory output and retail grew at a faster pace in August. I don't know what to make of this because it's a very fragmented market over there too, I guess, in China. While the downturn in property sector intensified despite a recent flurry of support measures. And that's exactly what I was just talking about. Factory output, retail is great. Their commercial property is bleeding. Things are just not looking great. I told you guys last Friday about Micron. I thought Micron was doing really well and went down. It just got upgraded, and Micron is definitely a top stock. And Micron is still above the 8-day EMA. And it's a chip stock, and it got upgraded. So if Micron, I wouldn't be doing anything right now. But if Micron can come up on higher volume, can come above the 72.29 level, we may have liftoff there as well. As I mentioned, if you're looking at the sectors right now, the best thing I'll tell you right now, they're fragmented as hell. Energy, consumer discretionary, communication, but be careful because these can be impacted by the broader QQQ because the chip stocks are part of this sector. Honestly, right now, I would be focused on financials, utilities, and energies. Maybe even the Dow Jones. You'll get better, and let's watch technology to see how it's doing. Because if the chips are dragged down, the entire QQQ will be dragged down, and the QQQ is essentially consumer discretionary, communication, and technology. So let's keep an eye on that because that can really if tech goes up, it'll drive Invesco QQQ higher because these are already doing well. But if it doesn't, it's going to drop these lower. So today, if you're looking at the QQQ, the big question is going to be, and I'm telling you, the big question is going to be, are we going to break down and go and keep going towards the 50-day moving average, a 100-day? We're already below the 50, the 100-day average, or we're going to back up and hit the 50-day. Statistically, we should hit the 50-day because markets are much choppier than directional, but who the hell knows? And it is Monday, holiday, coming off of a second full week. Volume is high. It's very hard to say. Now, day trading stocks. Now, I want to say something. Sometimes I give you stocks like Tesla, Nvidia, whatever. Those stocks you can do with any broker. But sometimes I give you these squirrely little microcap stocks, and you can't execute them on the short side with a regular broker. I understand that. They're hard because they go the right way. You may need a specialty broker for this. One broker that's really good is Lightspeed. Now, I don't know if you remember or not, but when I first started doing this about a decade ago, I recommended Lightspeed. Go look at my videos from 12 years ago, 10 years ago. Lightspeed, you got to pay a little bit, but they're the fastest broker for microcap stocks, hard to borrow stocks. Lightspeed is a good broker. And if you're having problems with Lightspeed, I give you another one. But this is the stock I want to focus on today. It's called SQL. It's spiking right now, as you can see here. And look at what happens. What happens every time it spikes? It comes right back down, and it doesn't even have high volume. Here's what you do. This is the overnight trading action. You don't do anything to this stock. You wait a day or two. As soon as the stock, day or two, not too much longer. If the stock trades below 17.06, let's say it's trading at $17 even, you sell it. You sell it and you wait for it to come down all the way to the $12 level. I think it's going to go from the $17 level back to the $13, $12 level, $12.50 level. But you may have to be patient. So I would put a sell stop or an alert right here at the 17.05 level and watch this baby come down. I'm pretty sure within the next maybe 3 days it'll come down, but give it a few days to do that. Now, before I let you guys go, if you haven't heard, my weekly cash flow challenge is the rage right now. So I'm going to go live at 10 a.m. Yes, 10 a.m. Eastern time to give as many people as possible the last chance to learn all about it, the last chance. That's because while the major indices were floundering through August, my once-a-week 60-second trade was a completely different story. In fact, based on a $2,000 stake, anyone could have made $2,900 for the month while stocks were going nowhere. It's all thanks to a little-known pattern in the market that could have delivered an incredible 93% success rate over the course of the year. A pattern you can start right away, start trading right away to target extra cash flow with any brokerage account. Any brokerage account. Just click the link below, save your spot. It's happening in an hour and 40 minutes. You don't want to miss out. It's going to be the last time I'm doing this. And remember, we're issuing a trade today. The first time we're issuing a real live trade. You don't want to miss out. I'll see you folks at 10 a.m. Eastern time sharp. Bye.